Okay, something I'm extremely now excited to introduce you, which is I know a lot of you have probably been at one point or other have been helped by Chandara and June, or have at least seen their incredible posts on our Facebook community, and I think they're extremely valuable members of the Facebook community. So actually, who here, by the way, has well, I'll just get a few things up. Who here, by the way, has actually ever been helped by Chandara or June? Brad's got yes. Muriel, Trisha, Louise got. I'm just reading these out. Louise got yep. They're the best. Maggie, yep. Joshna also yes. Stephen, many times. Victoria, yes. Pamela, yes, very appreciated. As I was telling Chandara, he's going to be quite famous after this, but it looks like he's already quite famous even without this interview. Regent, yes, thanks, man. Tony's got yes, special wishes for Chandara and June. Unfortunately, I have to go. We'll watch the replay. No worries, Tony. Thanks, Pete, for being on live, and the replay will be up within the next 24 hours. Okay, awesome. I'm just going to see if I can just check in and on board with Chandara, making sure his mic is okay. And he even told me today they've got a brand new mic on the recommendation of their son, so they should not have much distortion. Okay, Chandara and June, are you there?
Yes, we are.
Yes, we are. Can you hear us clear?
Awesome, nice and clear. Can everybody could everybody actually just hear them just then? It looks like all good to go. Chandara and June, maybe a little bit, maybe I'm not sure how far you are from the mic, maybe just a little bit closer.
Bit closer? Okay.
Yeah,
bit better.
That's very clear. Great. I want to say thank you for taking the time out to be also on this hot seat, because I think it's been a long time coming. For those of you who actually don't know, I actually have known Chandara and June for how long has it been, guys? Almost close to 30 years.
1992. So
yes.
Yeah, around the 90s, definitely the 90s, early 90s. So yeah, I've known them since high school. So they are good old friends of mine from a long time ago. So I do know them quite well, and it's so great to see them also on Blueprint, and having them not only being part of Blueprint, but just seeing them make massive, positive contributions to our inner circle as well, and helping so many people, which I've seen. I'm just seeing yeses all the way through from your help, which is great. Elaine's got 30 years. Elaine's another old high school friend of ours as well. That is currently on the line as well. So welcome, guys.
Hi, Elaine.
Hi, everybody.
Okay, great. I just want to ask, so Chandara and June, what, I'll ask both of you. So this question always relates to both, and of course, please feel free to add in, either party really doesn't matter. So where are you guys from, and what do you actually do for a living?
I'm originally from Cambodia. I left Cambodia over 30 years ago as a refugee. We now reside in Sydney, and I have been living in Sydney since. I am an electrical engineer. I work for Sydney Tran.
Okay, I came from China originally. When I was 15, I migrated to Australia with my family. I met Chandara in high school, and we've been together ever since. And what do I do for a living? I'm a pharmacist. I work in a public hospital as well as a Priceline pharmacy.
Great. Yep. And so everyone, did you hear that? Chandara is Sydney Rail. So if there's Chandara, you're gonna hate me saying this. So if there's any problems with Sydney Rail and every train delays, just blame on Chandara, because it's actually his job to make sure that the trains run on time.
Please
so that's what I
always do. Already.
Even June blame on me, so it's okay.
And surprisingly, Chandara actually, what I've been told is Chandara actually does not take the train himself. So he's not using the trains himself, even though he looks after the trains, by the way. Anyway, so how long have you guys actually been with the Freedom Trader Blueprint, and what's been your experience been so far?
We have been with the Freedom Trader Blueprint since October last year, so it's been a year. Our experience with Freedom Trader Blueprint is actually fantastic. We love every minute of it. We spent the first month, October last year, learning the module from the begin to end. We really dig deep into it. We really enjoy it pretty much.
That's awesome.
Yeah, Terry, it's been a fantastic experience. Like it's very enjoyable. It's fun, and like we're actually very active in the market because we love doing it. And even though waking up early in winter it's hard, but it has the incentive. Like it actually, when you see your portfolio continue to increase, that actually gives you the incentive to actually wake up early. Yeah, it's great. Yeah.
Awesome. Yeah, actually, it's great that you mentioned that the 1 year, because I didn't realize it's been 1 year now since you've been with me. So time does fly.
Yeah, we actually start pretty much the 1st of October. So
Yeah. So happy anniversary, guys, to Blueprint.
thank you.
So before Blueprint, what? So I know, Chandara, you also traded from stocks to options and that sort of thing in the past. So before Blueprint, what sort of frustrations do you actually experience in regards to investing, and also as part of your financial future back then before Blueprint?
Terry, I have a bit of experience with stock market. I put a lot of time and I spend a lot of time reading a lot of book. I read over 70 book of how to trade the stock market, but I never have a proper system set up. Yes, there's some year I make some money. There's some year I lose a lot of money. So it's just a lot of frustration because all the hard work have not been pay off. But with since I joined the Blueprint, is yeah, pretty much everything changed. I got a system in place, easy to work with, it's comfortable, and yeah, it's really enjoy it.
And June, prior to that, I'm not sure. I know Chandara did touch stocks and options. Did you have any experience in the markets at all prior to Blueprint?
No, not at all, Terry. When he was doing it, I literally was too busy with the kids because the kids was a lot younger, and I saw him putting a lot of effort, a lot of time, study the market, doing all sorts of analysis, but he's not getting the result that he wants. And yeah, it's just not getting any consistent result. But I was frustrated, but I couldn't help him because I was just too busy, tied up with the kids. And this time, I think when we decided to join Blueprint, and I said we should do it together, and maybe if I actually can do it with him, we can help each other out and we can bounce ideas off. And I think it's actually quite successful, this partnership we have. I think we are very different in personality, but I think that actually balance each other's out. So Chandara, he's a bit aggressive, if you like,
Yes.
And I'm more conservative, so I'm a bit more cautious. So when he go too far, I would pull him back. But because sometimes when I'm a bit more too cautious and I don't want to enter the market when I need to, and he was there who would just reassure me. So I think, yeah, so because we work together, and that's why it's successful. And also because your system is so easy to follow. For me, like I never have anything to do with the stock market. I found it so simple to follow. You just need to be logical and apply the rules. That's all you need to do. Because I always thought the stock market is like this dangerous place where you just go in and you can so easily lose your money. But now it's, to me, like I'm actually trading the American market. I'm trading the biggest company in this world. It's unbelievable, just like how far I come.
Yeah. I mean, it's actually quite unbelievable to see how far you've gone. I'm going to be sharing your results later as well. But there was another thing too, June, that intrigued me, because you talked about the partnership between Chandara being more aggressive, you being the more cautious. But I think there was something else that you're good at that Chandara is not as good at, but yet Chandara is also good at certain things that you're not as good at. So I think what he mentioned something about him being more on the technical side and you being more on the fundamental side. Is that correct?
Yeah, absolutely. Like he was able to set up all the charts and all the. You better talk about it because you're a technical person.
So yeah, when we start the Blueprint, I find it's very easy just to jump straight in, set everything up, everything's ready. June just know that, okay, come to the technical side, I will look at it like, we're talking about the RSI, the SDO, and so forth. Whereas come in terms of reading what about the stock. She will look into all the fundamentals. She love reading, and I hate reading. So she do the reading. She pass the information to me. We bound idea. She, you know, something that I see, and the other thing that she didn't see. So put those two of us together, and we find it's pretty easy. So we kind of now know what the other good at, and just more like enjoying day rather than frustrated and worry.
Yeah, no, it's I think you're one of the few couples that I think is working so well together, which is why I actually started introducing, you know, for couples to do it together, because I saw the results from you both working together, and that sort of inspired me to now whenever I offer blueprints to other people, I want the you know, if they've got their significant other or their partner, whether husband or wife, it doesn't matter. I want them both to actually do it at the same time, and I actually offer that to the partner as well. It's really because of you guys, because I saw how well if a partner or the two partners work well together and the results that actually come out of it, rather than, you know, saying one partner does it and yet the other partner is sort of fearful because they don't fully understand the program. But having both partners do blueprint, whichever one that actually executes the trade, it really doesn't matter. But just having both partners understanding fully what each other is doing, it just gives that comfort in the family. Would you agree with that?
Yeah, absolutely, Terry.
Yeah, especially because, say, from my own experience, when I trade the market, June always very fearful because she doesn't know what it's like. Sometimes I have my system set up in place, but because she doesn't know what's going on, when she see I lose a lot of money, she be panicked. But when we do together, we see the point. What you know? Yeah.
So like before, when he was doing it by himself, he's trading the options, he's losing money, and I get frustrated because I don't know why he put in so much time but it's not getting the result. But now when we do it together, even then when the market has a pullback, I understand why there's a drop in the portfolio, and we know if we just continue to apply the rules, we'll just wait for the opportunity to go back up or wait for the market to take us where we are. So I understand. I guess I can understand the reason behind it now.
Yeah, and actually, Chandara, can I just check in with you? I know you said you read about 70+ books on the investing side, trying to find that elusive system in the past. How long? Actually, the question is, how many years were you in that period of time where you're basically making some money, losing some money, and sort of going nowhere for a long period of time before Blueprint?
I started reading just before the year 2000, but I actually started trading in the year 2000. But between the year 2000 and 2003, 2004, I trade like Australian stock market during the tax boom, and bust as well. And I also started trading option. But during that time, it was some year I lose, some year it's profitable. But because I don't have the system, then I took a break for a couple of years, 2004, 2005 roughly, and then I pick it back up again. I think 2006 to 2008, and it just never go anywhere. So, but from 2008 onward up until last year, the only system that I used was it's pretty much buy and hold. I just buy Telstra, and I never look back. I just buy it. My strategy was just to look at high dividend stock, buy and hold. Some of the stock I hold for, God knows, from 2007, 2008 up until last year.
Right. Yeah. So more of a passive investor versus a more active that you are now.
That's correct. When I was really active, back in the early stage, like in the early 2000s, like I'm trading option 20, 30 trade a day. That's a lot of trading. Whereas then come to around the 2007, 2008, like one financial year, I probably buy 2 or 3 stock. So it's completely different.
Yeah.
Then your start from last year, October, your system is changed the way we think completely again. So it's more like I have like kind of 3 different stage of trading.
Yeah, no, it's actually good to see the evolution of what you've become. So from a very passive hold investor to ultimately to almost I would probably say even intraday trader, where you're buying and selling literally multiple times a day, which is quite stressful in a way, versus now a more relaxed manner, where profits are coming through, but yet you're not spending as much time as well.
That's exactly right. Relaxed and profitable.
And it's also fit our daily routine, because we trade early in the morning before the kids gets up, and then when we finish trading, we actually have time to go for a walk before the kids wakes up. And then at night time, you just need about half an hour, maximum 1 hour, to do your preparation work for next day. So I think the amount of time we spend in it and the result we're getting, it's incredible.
Yeah. No, that's awesome. I mean, if you're looking at per dollar, the dollar value of the hour that you're using now, as your system grows, and it's going to logarithmic grow, therefore per hour it's going to be quite a high amount versus what it used to be, where you're spending hours and hours but not getting the result at all.
That's right.
That's correct. Yes.
That's right.
Yeah, no, that's cool. And so you briefly mentioned about that that I guess getting the work done and then just going for a walk. So really, in actual fact, what's actually your typical day these days? What does it actually look like? So you do your your morning trades. Actually, no, I'll leave it to you. So what's your typical day look like?
So our typical day, pretty much, we wake up at approximately 5:30 in the morning this day because of the day winter time.
Winter finished.
June will start the computer, start an IB interactive broker, and start the FinB and stock chart. I go in and making a cup of coffee and make a cup of tea for her, and by then like 5:30 we straight away jump in, have a look at the daily market analysis, especially to do with the S&P 500. We look at the RSI, STO, and VIX, and what is the overall market condition, whether it's high market, neutral market, or low market risk. By looking at that, we will decide what sort of action we should take. If it's a high market, should there be a list of stock that we should be selling? If it's a low market or neutral market risk, we look at the buying opportunity. Those research, those detail was done the night before. We spend approximately half an hour to an hour to do the research to prepare our daily investment and trading journal. So yes, and by 6 o'clock market close, we do our thing, go to work, whatever we need to do. But at night time, we pretty much spend just like half an hour to 1 hour to research. That's pretty much it. We don't put a lot of effort. In terms of research at night time, we mainly look at June will do a lot of reading. She look at the Wall Street journey. I mainly look into the stock chart, analyze all the technical side. When she point to me, this stock is quite interesting, can you look into that? Then I do a lot of research using FinVs. In FinV, there's a lot of news from it, and the latest news at the bottom from each stock. That's pretty much it.
Yeah.
Okay, no, awesome. Yeah, thank you for letting me know. And I think it just adds to the fact that people think that you need to spend hours and hours in front of the screen all day. In actual fact, you do the. I think it's also an advantage that we being Australian in Australia as well, is that we're not part of the US hours, so therefore we are able to get our work done off market hours, and then just during the market hours for the last basically the last either the open or the close for like 15, 20, 30 minutes, and then your day is free to do whatever you want to do without it being affected by the market movement on a daily basis. Seeing stock stock prices jump up and down in front of your screen, which I think is extremely stressful and emotional. And I think Chandara would have experienced that way back when he was doing the active day trading as well.
Yes, I want to point out, I think you mentioned before that when you was on holiday, during the period when the American market opened, it actually hard to look at, and I actually found it exactly that. Now we have a couple stock that is in the Australian market, but I never look at it this day. I just look at do the analysis based on that half an hour at in the evening and trade in the morning, and that's it.
We use mock order to help us save time, so we can actually do a lot in that half an hour. So we usually, if we need to buy anything, we just put the mock order in, just leave it, let it run. And if we need to sell anything, we just literally just sell at market. Because IB is so powerful, the platform, as soon as you put the order in, it gets filled straight away. So sometimes when we're really busy, like during a neutral market, we might have to buy a lot of stock. And we found that even we have to buy 10 stock, there's no problem in the half an hour, we're able to do that. Because I think we do the same thing every day. I think it's important to follow the same routine, what you do every day. And if you follow the same routine, it just becomes second nature. So we know exactly what to do in the half an hour, and we can finish everything we want to do in the half an hour.
Yeah,
I just want to point out one thing about the mock order.
By the way, what Chandara and June means mock order is the market on close, or MOC order. So that's what he's talking about.
Yeah. So with the initially I thought that mock order is it closed 15 minutes before the market close. That is not the case. It is dependent on the stock, because I just found just like a couple of days ago, I tested out the mock order 3 minutes before the market closed, and it's still accepted.
Yep. So, yeah. No, it's true. The mock MOC order is dependent on the liquidity. So you'll find that ETFs MOC orders literally is taken almost to the last minute. The bigger stocks which have a lot of liquidity, but that can change day to day as well. So in that one day, sometimes when there's a lot of liquidity, the IB will allow, because they know they can buy and sell and they can lock in the order, they allow the MOC orders to go all the way towards almost to the end, compared to say 15 minutes. But 15 minutes is a good, I think it's a good time just to know that, yes, try to get it in time. So in case it doesn't take it, then at least you're in. But don't despair. You never know. So you just still give it a shot. And if it doesn't, then it will just let you know. And then you just got to do it on a normal market order, as close as possible to the actual market close.
Yeah, that's right.
Yeah, cool. Now, thank you for pointing that out, Chandara. So, I just want to ask you, any particular lessons you've learned that stand out during this journey of yours over the past 12 months now?
Yeah, I can answer that because I make a big mistake on one particular day, Terry.
Right.
So I can explain that what happened on that day, and I guess all the new member can actually learn from me and don't make the same mistake I did. Terry, do you want to bring up my portfolio?
Yeah, sure.
I probably can explain a little bit better.
Yeah, okay. I'll bring up the portfolio. Okay. Yep. Okay. I've got your the investment portfolio in front of me. So yeah, June and Chandara were willing to, again, very gracious of them to share their portfolio, and of course, no dollar figures, just for privacy reasons. But in terms of pure, they've done quite a number of trades, and we'll go through that a little bit longer later as well. But June, what is it that you wanted me to find?
If you want to just scroll down to the bottom where we actually have the summary.
Sure.
Yeah, please.
Yeah. Okay.
Yeah, we've done quite a lot of trade because we were quite active during this 1 year period.
Yeah, which is awesome. Awesome to see.
See on when in that box there, you can see the percentage of the positive trade. It's 87%, and then the negative trade it's 13%. So when we actually go in to analyze those negative trade, we actually found that out of that 37 trade that was negative, there's 22 trade is actually first position loss. So basically it means that for 22 times in this 1 year, we're able to turn that negative trade into a subsequent positive trade.
Okay.
Yeah, so you just can you that's what it means, minus the 22 first position loss, and then you ended up only 15 trade. That's actually negative.
Right. Okay.
So, yeah. So if
So,
I actually go sorry, yeah.
So June, can I just clarify that? What you're saying is that out of the 37 negative trades, but in actual fact they were just first position, but subsequent second and third positions, they made the actual trade become a positive. The actual stock trade become a positive. Is that right?
Yes, so it recovered the first position loss, but also ended up making money in the second or third or even the fourth position.
Oh, that's
So
awesome.
so I don't really see that 22 trade is a negative, because to me it just means that the Freedom Trader system works. For 22 times in this year, we're able to recover our first position loss. So
nice.
If you take that 22 out of the 37, so ended up 15 trade, that's actually a negative trade.
Yep.
Okay, so if you look at the next one, yeah, so out of that 15 negative trade, there were actually 9 negative trade done all on the same day. This is where I make the mistake on that day. So this is where I want to explain what happened on that day. So there's 9 of them were done on the 6th of February this year. So I don't know, Terry, do you remember what happened on that day?
6th of February was the inflation. Yeah, the inflationary fears where interest rates were supposedly going to go up, and everyone just panicked, and the market tanked on that one day.
That's right. Yeah. So I think the market actually dropped about 50 to 60 points, and VIX actually gone to 35 and over.
Yeah.
And on that day, Chandara was actually already on his way to work, and I was the only one sitting there trading the market. And when the VIX gone above 35, I literally panicked. And I actually went to look at the investment and trading flow chart that Dwayne used. Yeah, so, but when I read it, because I was sort of panicked and I read it too quickly and I misunderstood what I need to do, because it actually says consider reducing position size. And I read it as consider reducing positions. So I thought I need to close a lot of position. So that's when I went ahead and closed a lot of my position on that one day, and ended up negative trades.
Yeah, no, that's really
so
good.
That's what the mistake I made. Yeah, so basically that's why I put bracket panic sell. So I did panic, and I didn't understand exactly what I need to do during a market pullback. So I just hope that my experience just teach other members not to do that. So if market pullback, you can hold on to your trade and don't panic.
Yeah. No, I'll quickly see if I can bring up what you spoke about. So I know exactly. This is the time period that you're talking about right here, that June's talking about, where literally the S&P had that drop from almost the basically 2,900 mark, and it dropped all the way down to 2,600 and dropped multiple days in a row. And right here as well, I think this is the one, June, you're talking about on the 8th of February, and where see over here, you'll notice that the VIX spiked on that beyond the 35 mark, and it was really a number of days it was there. So she mistook it to literally sell down everything. But one must notice that in our system, unless you're trading very, I guess, speculative stocks, or you're purely trading and you're not investing as such onto the great fundamental stocks, that it's okay to lighten down, but not necessarily sell out everything. And June was saying that her mistake was that she sold out of everything by not fully understanding it, and therefore that added to the number of losses. But in actual fact, if she had held on to it, then those ones would have easily recovered, and what would not have been the actual losses that is currently measured. That's correct, June?
Yes. We look back at Joe's trades. Literally within 2 weeks, all of Joe's negative trade all become profitable if I would have held on to it during that market pullback.
Yeah. So hopefully, no, sorry, June, cut you off by accident.
Yeah, I'm just saying, if you actually take that 9 negative trade out of the 15 trade, we literally only have 6 negative trade during that 1 year. So the result is unbelievable. Even like when I go back and analyze the result, because we got the interview coming up, I just thought, okay, let's go have a look where we make mistake and why we have the negative trades, and ended up with only 6 trade during this 289 trade that will actually make a real loss.
That's incredible, because that means that out of almost 300, 6 is what, 2%, June?
Yeah, that percentage next to it is just a 2%.
Yeah, literally about 2%. Yeah, just over 2%. So if they were not there, you literally would be sitting on, close, easily over 95, between 95 and 98% in terms of success rate or win rate.
That's correct. Yeah.
Yeah, that's right. Like, I could not believe how well we went as well, because when we go back to analyze the trades, I was like, okay, actually 9 of them was actually coming out on that one day. Yeah.
Yeah, that is incredible. So firstly, has everyone picked that up what June said on the first part, where the minus 22 first position losses, in actual fact, out of that, really 15 of them, out of the 37, the 22 of them were actual fact ended up being a positive, which is what's Darren Sanders, who's on the line, is his same experience where he talked about not having any stock losses on overall position since he started investing. So it's very, very similar to your experience, June, where the first position is, even though sometimes there's a loss, it's okay because your second and third position will cover that and more. So hence why we always say, position rather than property. It's actually very similar. Position. With investing, it's position size. So it's all about protecting yourself first, thinking about and not getting too greedy, putting too much on in the first instance, because that first instance may not be the final investment or trade that you'll put on. You will be put on second, third, fourth, maybe even fifth position, and overall your overall stock position will end up being a positive, which is what June and Chandara has experienced.
Yeah, Terry, I also want to point out regarding that stop loss, because when we started, we try and test some of the stock using a stop loss. It doesn't seem to work for us as my personality, because it just every time we put it in and it just keep hitting that stop loss, we took the loss. But eventually, because as soon as I hit the stop loss, our trade got stopped out, and then we watch the same stock for the next 2 or 3 weeks, and we can see that it come back out as normal. If there's no stop loss, we would buy the second position based on the system, and then buy a third position, and eventually it just come back. So
we decide not to use stop loss anymore.
Yeah, okay. Yeah, I mean, this is the a market also where we don't really do what I call extreme active trading anymore with stop losses, only because of where the market is at. It's been in new highs. So when the market's at brand new highs now, the chance of pullback and a magnitude pullback is far greater. Hence why stop losses don't work as well. And we, even ourselves, it's like we haven't used stop losses, even though we've shown it in the course, which is an option. But even ourselves, we haven't used stop losses easily for over 1.5 to 2 years now as well. And it's actually worked very, very well without the stop loss. And it hasn't, it has not added more risk. In actual fact, it's actually probably increased the returns, like what you found.
Yes, yeah.
That's interesting. Yep. Oh, that's good.
So thank you for that. Yeah, so actually, since I've got their results, I'll quickly scroll through them. So just letting you know, again, they're all our major companies that we speak about. Nothing speculative resource type stocks that hopefully will make a profit. Their results, as you can see, are quite extraordinary. From definitely expect minuses here and there, but like what June and Chandara has talked about, how, for example, this is one example right here. American Airlines, there's multiple I guess positions that he's taken on board. I'm looking at that, and 2 of these, for example, are right here sold on the same day. There's a negative here, but then a positive, so it basically just bounces each other out. And overall, American Airlines has been positive and a positive experience for both of them. And if I look at the Apple's, same thing, multiple positions taken on board, and of course Apple really has not had a loss at all anyway. And just going to scroll down. So it's actually an amazing result. I mean, they are very, very, what do you call it? They have been quite active in the past year, which is good to see, because not only is it profitable, but also has allowed them to get basically practice with real money on the line as well. And it's really good, also good to see that there's a lot of things that they do that personally I have not done. So for example, if I'm looking at this, right, there's foreign exchange, AUD, USD, they're buying and selling on the actual dollar position of the currency itself. So that's something that I have not done in the past year, and they have, which is great because to see them profit from that. And that's what I talk about. I really, Blueprint Inner Circle. One reason why we did this is to teach you how to fish, and hopefully, I provide some examples of that, and then you will find your own, being on your own 2 feet, your own personality, and that makes me really happy because I see things that I don't do, and at the same time, when I see things like this, I'm also learning from you guys as well. Say, wow, this is something I missed out and didn't see, and maybe I should look into that as well, which is great to see. And there are, of course, others that we are very active with, like the Alibabas and so forth, Bank of America, Baidu. So just going to scroll. But I think in the end, we can scroll through the entire thing, but I think the summary and what we went through just then really does show the result of Jun and Chandara's efforts and what they've done. Basically 289 basically investments / trades that they've put on. At first sight, looks like the profitable is 252 of them, 87%. But in actual fact, from them dwelling further, which is what I probably recommend you guys all do as well. Go into further, your negative trades. What lessons can you get out of that? And sometimes there's no lesson. It's just you stuck to the rules and it's perfectly fine. But even without, say this they didn't even look at this. Even an 87% return profitable trade win rate is extremely high. But then by dwelling even further, by seeing that, okay, out of the actual 37, in actual fact, 22 of them were just first position losses. So really, the actual real losses that were not totally recovered is really 15. And then on top of that, 9 of them was what Jun will classify as a mistake, being a panic sell. So really, it's just in the end about 6 mistakes out of this. So their rate of win rate really goes up from that 87 down up to about 95 to 98% win rate, which is actually quite extraordinary. And per trade, they're going at 4.75. So every dollar they put through, or every $100, $4.75% positive expectancy, or $4.75 is expected to come back within just short of a 2-month period. Annualize that on average rate about 113% annualized, which is actually awesome. And one thing that they also kindly sent as well is their chart, which is so good to see. So the accumulated return since they started, it's been a year now, is just over 20% for their portfolio. Their 1-month return, and please, this happens, and be okay with it. The September month was not as good. It's -1%, and it happens. So you should never be, concerned or worried that you get a negative return in a month. It's perfectly fine. Some traders will say, oh, they must make a return every single day they're trading, or they won't make a living. And the truth is, the market will only give you what it gives you. By trying to force something, which when the market is not there to give it to you, you'll force something that does not exist, and hence you're just taking on board extra risk. So accept that these things do occur from month to month. But then if you look at the 3-month return for the quarter, July, September, it's 5.86, and 5.86 on a quarterly basis, that beats pretty much most fund managers that are operating in our country or even globally. And hence why they're going towards that cumulative of 20+% return because of that. And they've even gone down to their best return in terms of month-wise. November 2017 was 4.4% for the month, and their worst return was December 2017 at -1.5%. So that negative month of September was not their only negative month. They've also had other negative months which were greater than that in December, basically almost a year ago now. So it's just goes to show that month to month, it's okay to have negative months. It's okay, because what ends up mattering in the end is your cumulative result. And just from looking at your their result, you can see how they started very slow and didn't go anywhere, right? And a lot of people, and I recall on Facebook, and I think Rodney, I'm not sure whether Rodney's still on the line. Hopefully, yeah, Rodney, you're still on the line. I remember there was a Facebook comment that you made, that you've had, when you calculated with that month or two, there were negatives as well as positives, so you're sort of not going anywhere or doing anything. And it really, this chart really does serve as and of course I explained, but this chart and their result does show a really good lesson, because It's just showing that how their result in terms of their what's occurred to their portfolio. Chandara and June, can I just quickly, I know the green line being SPX, can you just quickly explain the EFA and VT, what they are? And I presume the blue line would be your equity curve, would that be right?
Terry, yeah, the green one is SPX. I was just about to ask you the question, what's the EFA and VT, because I wasn't sure what is compared. The blue line, it actually that's our account, but okay. I wasn't too sure what's the other two mean.
Oh, okay. I actually was not when you did this because this you gave me this image. So I was going to ask you.
Sorry, Terry. This is actually generated from IB. So it's like a default, those two lines.
Oh, really?
I'm not sure what that, yeah.
Oh, okay. Yeah. Good question. I have not. Yeah, I need to actually find that out and let you know, because I thought you created this from the actually just from looking at this. Yes, it definitely is IB now from the side. But in terms of this myself, I don't know. So let me find out. That'll be interesting to know in terms of what this actually is. But the blue line is your equity curve. So it's showing how my main point that I was trying to get at was that. You know, they started and initially it looked like they did, you know, went nowhere, and then they had a bit of a bump in November, and then, you know, back in December had that negative 1.5%. So their equity curve or their balance fell back down. So it looks like, okay, in 3 months' time they haven't done too much or haven't gone too far, but it's still way better than easily that quarterly return is definitely way better than, say, a normal bank deposit. And then even comparing to, say, the market itself on the SPX, the SPX is now beating their results. But then what happens is that they kept on plodding along, and all of a sudden it just skyrocketed. And I think this is very similar to Trisha Butler, who's on the line as well, to her result over the last quarter when she's just posted on Facebook her results of shooting across within a matter of months as well. So and now of course definitely surpassing the result of S&P 500 index, which is pretty much better than most fund managers, which can't even keep up to the index itself. So hats to you guys, because the effort is definitely paying off.
Yeah, Terry, we actually had 3 months that's negative during this in the last 11 months.
Yep. Okay. Yeah. So like June said, 3 months at being negative. It's it's one thing to accept that it is definitely part of the investment game, and you're going to have that. And of course, even I'll even go to say that even negative quarters will happen as well. So it's not only negative months, but even negative quarters that will happen from time to time. And just being okay with that, as long as your portfolio and you're following the rules, over time that negative will end up being a positive anyway. So it's more of just getting through it and consistently actioning and not giving up. And not seeing those negatives as a real negative that you're down, and therefore you don't want to put in the effort anymore, and that's when the whole account starts spiraling out of control. But pushing through, and the results will end up showing.
Yes, that's right, absolutely.
Yeah, cool. Thanks, everyone. So I also wanted to ask, I know you shared what your couple of the takeaways that you've had. Anything else would you say in terms of what would I say, characteristics of an investor trader in terms of psychology that you would say one or two of them that you think is the most important that has served you well over this period of
time? I think the simple thing is just follow the system.
Okay.
I mean, if you're new to the blueprint, take your time. Me and June took us one whole month in October to learn the system, but carefully, step by step, follow. Do not rush any section that you're not sure. Just keep repeated and ask a question in Facebook. There's so many people can help. We put a question out there, and we learn a lot from reading. There's so many good people in there that we learn. But there's one thing I want to point out to the news that joined the blueprint is that if you want to see how successful the blueprint is, look at Terry portfolio. Look at the entry and the exit point. Why is Terry in there? Because it's got all the detail in your portfolio. Why are you entering in that point? Why are you exiting it? Where the RSI when you enter, where the RSI is is below 30 and cross, whereas an SDO it crossed below 20, and when you exit is the same thing, but just the other way around. Yeah, I just pretty much follow everything.
Yeah. Okay. Yeah. Thank you, Chandara. Yeah, it's a good point, Chandara. What you just said is like you can deconstruct, because being transparent, I just wanted to show from the buy date to the buy price, sell date. So just from looking at that, from even past history, you'll see that even myself, I teach it, but I live it by it as well. So I don't do anything that's different to what I've taught. Literally, I'm just following the same rules that you guys are following. So the results that we've had ourselves, they work, and hence why I'm so comfortable in teaching it, because now it's passing on to you guys that if you're following it as well, and it's really good to see your results come through at the same time as as I'm also getting the same results as well as you guys, but of course sometimes even different stocks, which is perfectly fine.
Yeah, that's right.
Yeah. I found I learned a lot at the beginning by just reading the Facebook posts. Yeah, so there's so many things you can learn from other people's experience. Like, so I recommend if you're new and if you have time, just go and read the post. Yeah, and sometimes you might have the same question as other members, and your answer is already there.
Yeah. No, thank you for that, June. So I probably know this answer anyway, but I was going to ask you, would you recommend people join Blueprint and also continue on their inner circle journey with me?
Oh yeah, absolutely, Terry. It's so fun.
Yeah, definitely, without doubt. Yeah.
Yeah, thanks, guys. Yeah, so so I just want to say thank you, June and Chandara, for being here. So, has anybody? I'm going to do this. This is something I haven't done before. But has anybody got any questions for June and Chandara? What I will do is, if you've got any questions, please put in a queue. Maybe type it in, and what I'll do is, I'll actually put you live online, so you can directly ask June and Chandara. Everyone will hear your question, and June and Chandara will openly answer it as well for you. So, has anybody got a question? Please put a queue, and then I'll put you online so you can ask them directly. So I think the first one is from Jan. So Chandara and June, you're okay with that once I put them on the line?
Yeah, that's fine. I hope we can answer that.
Yeah, no, that's fine. No, you definitely can. Sorry, I didn't mention this to you earlier, so I'm putting you on the spot. Okay, is Jan? Okay, is it Jan? Are you on the line?
I am, but sorry, I was cleaning my keyboard. I do apologise.
Okay, you cleaned your keyboard and you had a cue, so I thought it was a question. So no
sorry.
No problem, Jan. Hello, James, you there?
Yeah, I am.
Hello. Hi, James. Yeah, please ask your question.
So I was just wondering if you could outline in more detail the preparation that you go into the night before in order to execute the trades the following day.
Okay, we have a few watch lists that we set up, and one particular, we call it the master list. So in that list, we got about 180 stock that we basically trade in and out of. So we will do a scan to pick up any potential buy out of those stocks. So then we'll write down the stock that we will look at the next day. But we also look at opportunity by looking at the biggest loser from the SP 500. So for example, today, if you look at the biggest loser of SP 500, Foot Locker actually lose 5%. Delta Airline lost 4%. So we sort of picked up the familiar stock out of the biggest loser. Then we actually will go in and look at the fundamental again and look at the technical, and then we'll write it on our action list. Is there anything you can add?
So to get your base 180 odd stocks, you're using stock chart and Terry's filters to produce that list?
Yeah, with that 180 plus stock, at the start, I actually go through Terry portfolio. I pick up every single stock from Terry portfolio, and I pick up the 30 stock from the Dow Jones. I add them up. I pick up the top 30 stock from the S&P 500 by capital, and from that point, I don't add those the whole lot into that watch list yet. So I go through individual one, see which one is suitable that fitting my criteria, because even though the fundamental theory have a 10 out of 10 fundamental criteria, some of my one I take one out, depend on the situation, depend on the stock. I'll be more lenient for a stock that I have a massive capital, that have potential grow, that there's a grow, that history show that for the last 5 years it's been growing, it's been going up substantially, and that's when I start adding into the list.
So we basically started with a lot of stock, and then we pick out the one that's suited with our criteria and put it in the master stock. So there's a lot of work at the beginning. I'll say we spend quite a lot of time at the first 3 months, and I think that's all the hard work at the beginning. And once we're able to sort it out, all those stocks, and then we have our master list, we basically just trade in and out of that master list, plus every now and then opportunity. So we put in the hard work at the beginning, and after the first 3 months, once everything set up, and it's really smooth sailing after that.
I just want to point out, on top of that, I think someone from Facebook group point out there's a top 200 by capital from Smart Money, and I actually went in there from the data aroma, and we extract all the data from there, and I put to Excel spreadsheet, and I actually put that into stock chart, and I do the scan from that point, and that's my other list. And when I pick up a good potential stock that I'm willing, that I'm happy to trade, then that's when I add that into my super stock watch list, master list, whatever you want to call it.
Yeah. James, what I might add, James, is sometimes you might, it's also important not to get overwhelmed by wanting to have too many stocks all in the one go. A fortnight ago, we covered the, how to start your watch list and start, having a list. Sometimes it's not having a massive list, it's having a small list that you get comfortable with, and then over time you slowly grow that list, rather than having, I must have 180 stocks in one go, and that would literally just overwhelm you. And if you're just going to be researching day after day and not do anything, by the time you have 180 stocks and you haven't done anything, then it's actually also potentially detrimental to your growth as an investor or trader, being active. So potentially just start off with, maybe even go back to what we covered last week on our last recording and have a watch of that, because that will help you establish that watch list that Chandara is talking about. And then once you start from there, then implement what Chandara said on top of that, and slowly grow that list that way.
Okay, thanks very much.
Yeah, no worries, James. Yeah, thanks, Chandara and Jude, for that. Awesome. Great answer. Louise, great question, Louise. So I'm just going to put you down. Louise, you there?
Oh, it's John here, Terry. How you going?
Oh, hey, John. Actually, good, John. What's your question, John?
I just noticed at the bottom of the list there that you had some ETF, China ETFs, a few of them long, but I think you had a couple of bear trades. Is that right?
Yes, and that was one of the unsuccessful trade.
Were you having a go at hedging a little bit there, or?
Let me go back and have a look.
Yeah, I'm looking at the June. I've got it on the screen, and what John's talking about is the China bull. There's a couple of the bear ones right here, China bear. That became a loss of that as well, and then the bull went on to the bull, which is the yin, and also a loss there as well. But overall, I think it was still actually okay with all of them. They sort of bounced out off each other. So I guess what was your I think John's question is, what was your rationale in doing these?
So if you actually look at those trade, especially the yang one, it actually a test trade, because what happened, we've been trading the stock, the Chinese stock market, like BABA, BIDU, EDU, and so forth. Then we found out I always looking around in stock chart, and I found the ETF, exchange trading fund, regarding the Chinese stock market, because June always look at the stock regarding from China. Like, even though like BABA is trading in the American stock market, but yet there's always somehow it related. When the Chinese market is down, BABA seem to go down as well. So we look at it, and then we found that Yang, which is YANG, is the opposite of the bull. So at that point we look at the Chinese markets already go up too high. I say, why, instead of just sitting there and do nothing, why not buy a Yang, which is when the Chinese coming down, and then we will make money. It doesn't work, so we lose money on that one. So that's a bad trade. Don't take that one.
Yeah. So I think John, I don't think it was more of a hedge. It was just more of what I probably call an opportunity trade, that because seeing that the Chinese market was dropping, thought that he could profit also on the short, rather than shorting it, he'd go long this ETF, which is a short fund, and possibly profit from it. But of course, sometimes it works, sometimes it doesn't. And in this case with Yang, it actually didn't work out.
Yeah.
Like, we were just testing something new. We just thought, oh, we'll try something different, but didn't work out this time. And we only hold it. You can see we only hold it for 2 days, and we get out.
Thanks for doing that for us.
Oh, thanks for the trading song of the week every week. Thank you.
Oh yeah, that's
okay. Yeah, so that's what I mean. Our community is quite incredible. Where there's Louise and John puts a trading song every single week, which is great, which is actually really good. Okay, and Muriel, final, because I've just noticed the time as well. So Muriel, the final question to Chandara and June. I think it's a good question as well. Okay. Muriel, you there?
Yeah, can you hear me?
Yes, we can.
Yes, we can.
Okay. Yeah, I just had a question. When you put an order for an MOC, whether it's a buy or a sell, in this case I'll say a buy, do you ever worry that, because it's not a limit order, do you ever worry that the buy may end up being higher than you anticipate?
Well, that's what we thought at the beginning, but the fact is you actually always get a better price than actually putting a market buy. So that's from experience, yeah.
So what we notice is when we put a buy order, when we put the MOC, toward the end, toward the last minute, the stock tend to go down. So we get a better price rather than buy at the market 5 or 10 minutes before. Whereas for the sell order, we never put a mock order for the sell. We always put to sell at the market, and if we intend to sell, we always sell approximately half an hour before the market close. That's where the price is a little bit higher. That's from our experience.
Oh, that's a good tip. Thanks.
Yeah, maybe Terry can explain why the mock order is a bit better.
Yeah, with the MOC order, sometimes it depends. I think over time, it's important just to be consistent, because what you'll find if you do many trades over years, the MOC order, sometimes it depends on the market. But what happens is a lot of these fund managers towards the end, what happens is they want to also close off their books. So some of them that are holding stock, they are potentially looking for an opportunity to potentially get rid of the stock just before the market, especially the day trading type funds. Get rid of out of their books before, and not to have overnight risk. So therefore, you'll see the very final sales towards the last minutes of the day, and hence why it can actually also bring back down the price. And it's really interesting what you said about having a sell side 30 minutes before the market closes, because you're potentially getting a higher price. So that's something that I myself haven't really looked at being 30 minutes beforehand. But what you could do is potentially, do a the RSI and STO, maybe even do a 5-minute chart of the same STO and RSI type scenario, and then at that half an hour, just have a look and see whether your at that 5 minute chart is the RSI and STO at the highs like you would normally sell, or is it the lows? And if it's at the highs, then great, probably the best time. If it's the lows, maybe you can still wait a little bit more and until it gets closer to the market close to actually sell and maybe possibly get a higher price on that one.
Oh, that's fantastic. Yeah, we probably try that next time.
Yeah. So it's I think it's what I think you've done very well is just being very consistent, because the truth is, you can never time everything to perfection. It's all about just being consistent. And if you're happy with doing MOC on the buy and then market orders on a sell 30 minutes prior to that, and you continue that, right? I believe it's just going to constantly, It's just going to constantly, over time, you'll find that it just balances out. So sometimes you might win, sometimes you'll lose, but over time it just balances out, and I think it's just going to get that balanced result. So I don't think it really matters that much in terms of the exact time.
Okay. Yep.
Yeah, cool. Thanks, Mira, for a great question. Okay, and Monica, I know you've got this question about the IB report. Chandara and June, because of the interest of time, would you be able to? I think it's the answer about. Oh, actually, Monica's just said she found it. That's cool. I was just going to ask you, getting that report of the chart. I think a lot of people might want to know, how do they actually get that report of the chart that you had? The one you were asking me about. How do you actually get that on the report? So maybe
under account management. Account management and report and portfolio snapshot. That's it.
Yeah, okay. So it's just a portfolio snapshot, and then that chart pretty much pops out.
And you can put the dates in, like the period that you require.
Yeah, okay, cool. Thank you for that. Yeah, so that's about it. Chandara and June, just want to say, thank you for your time tonight. I know it's been, so far you're probably one of the longest hot seats we've ever had. I think because, not only because of your result, but also we're trying something different where, of course, questions are getting asked by you, which is the first time. So you've done an awesome job answering these questions. So so thank you for tonight and the time you spent on getting the reports ready for me as well.
Thank you.
Thanks, Terry, and thanks everyone. Appreciate it.
Yeah. So anybody got anything to say? Please just type it in to Chandara and June, because I think it's been an incredible, I guess, an hour-ish of their time that we've spent with their portfolio, and just having a chance to talk to them, because there's so many takeaways that that even myself I've gotten out of it just from interviewing them as well. And I'm just going to quickly read through while I've got you on the line, Chandara and June.